As of March 2025, global trade tensions have escalated significantly. Under President Donald Trump, the United States has imposed 25% tariffs on imports from Canada and Mexico, effective March 4th, 2025. These measures aim to reduce the U.S. trade deficit and address concerns over border security and drug trafficking. In retaliation, Canada has implemented 25% tariffs on U.S. goods, totaling $16.6 billion, and plans to expand these measures. Mexico has also announced intentions to impose counter tariffs and other economic retaliations. Australia has not been exempt from this situation, as the U.S. has imposed a 25% tariff on Australian steel and aluminum imports. This move is a significant setback for Australian manufacturers, as it raises the cost of exporting these metals to the U.S., potentially reducing their competitiveness in the American market. Inflationary pressures leading to rate rises. The imposition of tariffs often results in increased costs for imported goods, contributing to higher inflation. In response, central banks, including the Reserve Bank of Australia, RBA, may consider raising interest rates to curb inflationary pressures. Economic slowdown potentially leading to rate cuts. Conversely, if the trade war triggers a global economic slowdown, the RBA might adopt an accommodative monetary policy stance, potentially cutting interest rates to stimulate economic activity. Impact on Australian exports. Australia's economy is heavily reliant on exports, particularly commodities like iron, ore, and coal. A slowdown in global trade could reduce demand for these commodities, leading to lower export revenues. Global economic uncertainty. The escalating trade tensions contribute to global economic uncertainty, which can lead to increased volatility in financial markets. This uncertainty may cause consumers and investors to adopt a more cautious approach, delaying significant financial decisions like purchasing property. Currency fluctuations. Trade wars can lead to currency fluctuations as investors seek safe haven assets. The Australian dollar may depreciate against major currencies, making Australian exports more competitive, but also increasing the cost of imports. Our view. With the RBA's next rate decision scheduled for March 31st and the federal election anticipated between April 12th and May 17th, the market faces significant challenges from reduced export competitiveness and inflationary pressures triggered by increased tariffs. Political considerations further complicate matters. In the run-up to an election, governments often implement short-term measures, such as strategic rate adjustments or fiscal stimulus, to boost consumer confidence and sway voters. These actions may temporarily stabilize the market, but risk obscuring the deeper structural challenges posed by global trade tensions. Should the RBA be forced to choose between rate increases to control inflation or rate cuts to counteract an economic slowdown, the property market could experience short-term volatility.